Welcome to the Biz Show, sponsored by InvestQuire. And now, your host, Barry and Lisa.
Okay.
Hi, everybody. Lisa and Barry from the Biz Show.
Hey, Lisa, how you doing?
I'm doing fantastic. I'm excited about today's podcast. It's our first time having guests on our show.
We do. We got some great guests in here that are going to give us some really good information and knowledge about business credit, huh?
Business credit, exactly. That's definitely a very, very great topic to talk about today. We have Jerry and Laura from Galt.
Galt, absolutely. You know, that's a mysterious world, right? Business credit. A lot of people don't even know that you need business credit or that there's even business credit out there, right? It's just my personal credit. When you start a business, a lot of people use their personal credit to get their business started.
Right.
So today we have Galt, Jerry, and Laura to help us understand business credit, what you need to get business credit, and then what it can actually do for you. So they're going to kind of demystify all the gotchas around it, so on and so forth.
Because it's not an automatic thing, right? It takes a lot of preparatory work, I guess, to establish business credit, right?
Yeah, well, we're about to find out, aren't we?
Yeah, I can't wait.
So
welcome to the show.
Yeah, let's introduce Jerry and let's introduce Laura. And they're from Galt, and we're going to give you guys the floor and tell us a little bit about Galt and what you do.
All right. Well, thank you for having Laura and I on your show today. It really means a lot to us, and we're big on relationships, and you guys are great people and doing great things out in the community. So once again, thank you so much for this time with you on your podcast. A little bit about Galt. We're on a crusade and mission to really get out and build strong relationships with business owners across the United States to really educate them on how to truly build business credit on their EIN, not their SSN, so they could really prop their company up to stand on its own financial legs. So you can get all the access to ready access capital and credit without what? Leveraging personal assets, doing personal guarantees, and destroying your personal credit score on your SSN. So those are just some of the preliminaries, but we're really great. We're a full service company. We're kind of like a CPA accounting practice, right? But they understand tax law. We understand corporate finance and regulation law. So we take that stuff serious. We've been doing this since 2007. So that's just a little bit about us. Laura, I'll give you an opening there just to introduce yourself.
Thank you, Jerry. Thank you, Lisa and Barry, for inviting us to this podcast. My name is Laura Ferretti. I'm originally from Switzerland, and I have more than 2 decades of experience in finance and banking. Today, I run my own business consulting practice with Galt, and Jerry is my mentor and my coach.
Well, he looks like a great coach to have, too.
You're very lucky to have him.
I think he's very lucky to have you as well.
Yeah, of course. We are a team.
So let me ask you guys this, right? Why do businesses need credit, and what are the benefits of having credit for your business?
Well, then we prop them up to ask these great questions. Great question, Barry. Why do you need it? Because it's really the foundation, to have the confidence that as you grow and scale your business, you don't run into hurdles on the traditional financing that you're used to, and you don't muck up your credit score, and you don't have to guarantee all of your family and personal assets. The benefits of it is not about going into debt, because everybody goes, well, I'll just pay cash and I'll just do it this way, and I've got what I need in case I need it. Well, think about the Wall Street companies and how they access it. So one of those big companies, you guys might be familiar with them, they started in Bentonville, Arkansas. You ever heard of that little retailer called Walmart? Right?
Yes.
They have access to over $100 billion ready access capital and credit, the best rates and terms. So do you think that Walmart would have been the world's largest retailer if they wouldn't have figured out how to truly get corporate credit to grow and scale? Not saying that everyone listening today will want to do that, but boy, you could rest your head on your pillow at night knowing that you'd never have to worry about cash flow if you could gain access on your corporation without you, the owner, could you? Are you tired of co-signing?
No, definitely.
Are you tired of personal guarantee?
Yeah, definitely. As the past CEO of a couple different companies, it would have been good to know that. We had to use our personal credit for various different things, right? And so sometimes it worked out well, sometimes it didn't work out so well.
Exactly.
Absolutely.
Yes. So what customers do you represent?
Anybody that's in business, right? We represent Main Street business owners, the small and medium-sized businesses, not Wall Street companies. So we're really here to impact. Over 90% of the business owners across the country are small and medium-sized business owners, and that's who we serve.
Wonderful.
I think this, I was just looking that up the other day, and I think there's like 93 million small businesses versus, the Fortune 100 and the Fortune 5 and 1,000 companies. So 90 million versus, let's say, 2,000, big difference.
Yes.
It is.
And then to be able to leverage that credit the same way the large corporations do, that's a huge win for small businesses.
So can you elaborate on the differences between business credit and personal credit?
So yes, let's compare personal and business credit score. So the personal credit score, it's actually built on your social security number. So when you get 18 years old, it starts automatically to get billed. It goes actually from a 0 to a 850 credit score, and it's mainly reported to the credit bureaus, which is TransUnion, Equifax, Experian, and so on. If we take the business credit score, it is built actually on your EIN number. The EIN number is the employer identification number. So this one has to be built intentionally. When I say intentionally, it has also to be intentionally and in a certain order, which is extremely important. And it has to be reported to Dun & Bradstreet business. I'm sorry, I have to say it again. It has to be reported to Dun & Bradstreet, Experian, Equifax, and Credit Safe.
So just to clarify then, the business credit would come from more of a corporate level because an EIN is not established unless you're a corporation, correct? So sole proprietors cannot establish a separate business FICO score. Is that correct?
Mm-hmm.
That is correct. So the main differences is personal credit goes through a lot of underwriting, debt to income, right? How much money you make, what your score looks like, what your debt to income is, how many loans you've applied for. And if you're a small business owner, you're using your social security number, your personal credit for your personal life and your business life. So it really causes that when those mergers happen, it really hurts your credit score. It's on this emotional roller coaster. These ebb and flows up and down. And when you need something personally, that's when you've overextended yourself on your business credit using your personal credit, which allows you not to get the money that you need to run your business. Corporate credit stands on its own 2 feet. So your company now, instead of being co-signed by the owner, stands on its own feet. Just like when we came out of high school at 18, we couldn't buy a new car, couldn't buy a new house, and we couldn't get a Visa card. It wasn't because we had bad credit. We didn't have any credit yet, and we had to establish that and show that by financing things and paying things on time. It works the same way on your EIN, to Laura's point earlier, that you've got to show your expenses are being shown on the company's EIN and getting rid of you putting your SSN on the line for financing your company expenses.
So that's why a lot of companies that are starting up or newer companies, mom and pop shops or whatnot, have to be very careful not to overextend their personal line of credit. There's a balancing act there, starting the company properly and slowly and developing that business line of credit so they can separate the two out and then be able to build that business credit to secure assets and whatnot. And leading into that, what types of things would business credit be used for?
Everything that you're doing now, right? Credit cards, lines of credit, equipment, vehicles, land, leases, properties, buying a new piece of equipment to grow your company, right? Because you need a special type of equipment or a better piece of equipment to, improve the efficiencies in your business. And when you have to use your personal credit, if you're overextended, it just doesn't allow you to get the money that you need. And you're really doing what? You're bootstrapping or saving for it, or you miss an opportunity to really grow and scale, to take your dreams to reality when you're mixing in your personal credit with your business.
So to be clear then, the personal credit and the business credit are completely different. Can you use the business credit to purchase personal items, or is that completely
I don't know.
a no-no? Yeah.
Well, we're never here to tell you what to do, but you wouldn't want to use your business credit to buy personal things. But here's what here's the caveat to that, right, Barry? Is when you build business credit on your company, that's going to actually improve your personal credit score. Because right now you're tying that in, and which wrecks
Oh,
most of the business owner's personal credit score. So by having your company now being able to do its own financing on the company without you, the owner, now your personal credit will go up, which you'll be able to buy things on your personal purchases a lot better. We actually are saving our business owners by building business credit on their EIN. We're saving them 20% or more just on their insurance premiums because insurance premiums are based on personal credit scores.
so are business financing guidelines a little bit less stringent than a personal credit guideline because you have this corporation, so to speak, to back you, or
Company.
how does that?
Yeah, a lot less.
Well,
It's only about using and paying on time. You don't have to worry about how much money you have out on loans or if you've got all of them maxed out. If you had all your revolving lines of credit at 99%, as long as you're making all your payments on time, companies need money to run their business, right? Cash flow. Where on the personal credit, there's too many factors: income, credit scores, what's in your bank account for the last 3 months, what your tax returns look like, your debt to income, your utilization, is it over 30%? I mean, I can go on, and I think all of you that are listening understand what I'm saying. You fill out an application and fill out more paperwork. They ask you for more documents to prove that you're actually taking their underwriting risk so they can give you money. That's all on your personal credit to fund your company. When you build EIN credit, you don't need any of that. You'll actually build a high robust score, and now you'll get a credit line recommendation so you have ready access capital and credit to seize opportunities, to survive the storms, to survive those dry months, paying your employees during those slow times of the month. That's the difference between both.
So here's a question, Jerry, because you brought something up. Um, and in my mind, I'm just like, so if I'm a new business, I'm just starting out, how much do you normally see a new business get in a line of credit that they have access to immediately?
Well, that is a great question. I don't like to just throw numbers out because it's all about you using and paying on time, and it takes time. It only takes about, really a year to 3 years to build a very robust credit line recommendation, but you will get 10, 20, or 50 times the amount of ready access capital and credit on your EIN than you'll ever get just using your revenues and your social security number and your personal credit.
Wow, that's
10
huge.
times?
10? Wow, yeah.
That's very, very wonderful to hear. A lot of businesses are very intimidated by exploring this because they think they're going to get, the opposite, like very little, because they probably feel like their business isn't
Yeah. My,
worth receiving that financing.
yeah, right now I know I have access to a lot on my personal. And so to have 10 times that, wow.
That would be, you could do amazing things for your company to help it grow and get to the next level.
Right, definitely. So here's the $64th question is, what do you need to get business credit, right?
Yeah,
So
walk us through the process of what you would do
what
for a new client
if I'm a new company just starting out?
A to Z.
Yeah, I do I need a storefront? Do I need a home address or a business address, a telephone number? What do I need?
Because we're hoping to get you some new clients from this podcast. So
Absolutely. It's actually you have to be registered with the Secretary of State as an LLC, right? Which means you could be an S corp, a C corp, or incorporated, but you could be an LLC and be a single owner, right? And you have to have an EIN
right.
from the IRS that's registered to it. You don't have to have a storefront. You could actually use your home address. We'd recommend that you get a registered agent. Most accounting firms and most CPA firms are attorneys. They're registered agents, and they'll charge you $40 or $50 a year, and they'll mail all your mail to you. That's the less expensive way to do it, but you just can't use a PO box or a UPS store and some of those co-sharing spaces. It has to be a registered address that will count towards building your corporate credit on your business. And then you just got to line everything up and make sure that you get yourself to look like a corporation. So you're asking, well, what does that mean? Like, you have to have a website. You have to have email addresses that match your website. It can't be jerry.jerrysplumbing@gmail.com. It has to be jerry@jerrysplumbing.com. It has to match my website, which there's a cost of fundability, folks. So you can't, if you just have a side hustle out of your home and you're just using it to build college funds or pay for vacations, then we're not a fit for every business owner. But if you're looking to grow and scale and get out of it, you set your company up to be fundable. We've got a 7-step blueprint to walk you through that. But that's all you have to do to get that set up. And you got to match and make sure that the business credit bureaus, which is Dun & Bradstreet, Experian Business, Equifax Business, and Credit Safe, long as they know you exist and it matches the Secretary of State and IRS, that's all you need to lay the foundation to start building your business credit score, all on your company. So your company now will access funding at the best rates and terms available. So you don't have to ruin your credit score or personally guarantee money for your company ever again.
I have a question. You just mentioned rates. So what would be like your average rate?
Rates, rates are always fluid, but what's in the market right now is anywhere between 0 and 5.5% typically is what you're going to get. So if you're buying vehicles, 2 to 3%. Corporate cards are different than business credit cards. There's a difference. So if you pulled out your credit card, you're like, I already have a business credit card. You do. Right. So pull it out of your purse or pull it out of your wallet right now, listeners, right? And if it says business, you'll look at the bottom of that credit card. If your name's first and then your company is underneath you, that's personally guaranteed by you.
Gotcha.
Right? A corporate card, if it says corporate on the top of it, it'll just have your company. That's not personally guaranteed by the owner. It reports to the business credit bureaus, and you can get your money at 0% for 3, 6, 9, 12, or 18 months. Would you rather use your money or would you rather use the bank's money at 0%?
Definitely.
Wow, that's a big difference. You look at your personal credit cards, they're 19, 20, 22, 25%.
But also it's better than the housing market, 5%. You can't get that on a residential interest rate these days. So fantastic. I was very surprised to hear that. Weren't you, Barry?
I'm shocked to hear that. I'm sitting there thinking, damn, we got a new line of business we got to get into.
And everybody thinks.
But you guys are going to do it for us.
Yeah.
Yes.
Everyone thinks they're walking around with these business names on their credit cards and they think, oh, I'm establishing business credit. But it's such a.
I have one. Yeah, I have one.
An interesting thing to understand. So we so appreciate this information, want to get it out to everybody.
Yes, definitely. Well, listen.
Aside from having all of these criteria, what do? Do you provide them a quick analysis and say you have 0 business credit and these are the things that we could do for you? Or do some businesses like organically establish credit without them even realizing it? So what's the next step?
So that's a great question. So like I said, what we want to do is provide a free consultation. If you haven't seen your company's credit score in the last 6 months and you're not monitoring that, you should be doing that on your EIN. But by being and having us on this, and since, Barry, you guys have us on this call today, we'd like to offer a free $50 business credit report for your company so you can see what it looks like. All you have to do is reach out on this show and let us know. All we need is your company name and the address. And then within 72 hours, we can provide that credit report at no charge by being a listener on this podcast. So that's where I would start. And then we would have a conversation. We're not here to do something to you. We're here to do something for you. And if our services would make sense and solve a cash flow challenge, or would actually allow you to achieve the goals that you have in front of you as an owner over the next 2 to 3 years, then we would set up a time to have a private consultation to talk through that with you.
Well, that's very generous of you. Thank you very much, Jerry and Laura, for that. Let me ask a question. You mentioned that Galt helps businesses build credit. Can you walk us through that? What's the steps that you guys do when you get a brand new client? What are the steps that they go through? You said something about a year process. And can you walk us through the steps?
Oh, does it really take a year?
Absolutely. Mm-hmm. Absolutely. So we've got a software. We're a consulting company that has a software that's got a 7-step blueprint in it. Like you heard Laura say earlier, it's got to be done intentionally. It's like working out at the gym. If you went to the gym and you signed up at LA Fitness and paid $200 a month, Barry, are you going to get physically fit if you never go to the gym just because you're paying for a membership?
I think I've actually done that in the past, and the answer is no.
That's kind of weird, but then if you go to the gym and you're paying a membership, but then you talk to some people, but you still don't use the machines, just because I went and talked to somebody and I'm paying a membership fee, am I going to get physically fit now just because I went there and I talked to somebody?
Right. Exactly. So
No,
the answer is still no.
right?
I mean,
You actually have to
you know,
get on the machines, right? And the more you use it, so Barry, if you and I went to the gym together and you went to the gym 6 days a week and you worked out 2 hours a day, and I just went to the gym 2 days a week and worked out 30 minutes, we're both getting physically fit. You're just going to get there quicker than I am, right? So corporate
Oh,
credit works the same
got
way.
it.
It only takes about 2 to 3 hours a month to do this, not per day, not per week. It's actually very simple to do. We've outlined a 7-step blueprint to get your EIN fundable, to get the business credit bureaus lined up with you to match the Secretary of State and the IRS. And then we have lenders and vendors that we work with in the right order to help you cash flow your business, grow your credit score, and get that credit line recommendation and get that ready access capital credit all on your EIN without your personal guarantees, without your credit score, and leveraging your personal assets to grow and scale your company. And we can do that in less than 12 months.
Do you provide like the do's and don'ts once a business is able to obtain all of these credit lines or financing or capital? How they, don't want to get in trouble, overextending themselves in their business. Do you provide like a coaching, if you will, around that?
Absolutely. Great question. So we provide a credit coach to hold your hand through the process as you're building it. And as you get those financing, that's a great point. You'll get sign and drive contracts with all the auto manufacturers, right? GM, Ford, Chevy, Dodge, buildings, equipment, iPads, electronics, computers, whatever your business is in, you're going to get access to that if you don't prepare for it and don't understand cash flow. So we give you a finance analyst. So as you get into that, you can understand your cash flow needs so you don't get into debt trouble or expense trouble. So we're a full service company on helping you build your credit, but also understand your cash flow before you say, well, I'm just going to go out and buy 5 trucks and 5X my revenue. We actually have a
Exactly.
software that you can punch that information into to see what the cash flow is going to cost you before you make decisions, so you don't get emotional about it and go into debt and can't pay for it. So great question. So we provide the financing to get you the financing you need and the cash flow, understanding that so you understand the value of the business so you can grow and scale and do it in the right way so you don't get into debt trouble where you owe the banks and you pay the banks all your money and all your profit and
Yeah,
interest payments.
exactly. Good. Great.
so here's a question. Let's say a new customer comes to you, brand new startup company, and the owner of the business has horrible credit. Their score is
Personal credit?
personal credit is 400. Is that more of a challenge for you and for them to establish that business credit
Does it affect?
than if it's somebody who has like a 790, 800?
No. Building credit on your company has nothing to do with the owner at all. So remember the EIN. So we're building your credit score on your company without the owner. So it's about using
Okay.
starter accounts. So a lot of times they're net accounts. So if you don't have a good credit score, places like Uline, places like Granger, gasoline, those are things that you will use for your company to start fueling your EIN credit score. So it doesn't matter about what's in your bank account. It doesn't matter what your FICO or your personal credit score is. It's about using those vendors and paying them on time. I can't emphasize that enough. If you're used to paying all of your creditors and all your lenders and vendors late, then you'll never build a robust credit score of 80 plus on your company. So it's about using, paying on time, and then you'll continue to move down the roadway where you'll get store cards like gas cards, Lowe's, Home Depot. You'll get credit cards, corporate credit cards. Then you'll get vehicle leasing. You'll be able to get lines of credit. You'll be able to be qualified for SBA loans if you're looking to take your business to the next level. All without any of your credit scores, all without any revenues that your company's doing or not doing. It's all built on just using lenders and vendors that report to the 4 credit bureaus and then paying those payments and those bills on time.
So if someone did not pay their business bills on time because maybe they didn't have that discipline in their personal credit, would the creditors go after their personal assets, or can they not do that because of the corporation structure? How do they
Yes.
work the angle of getting repayment back? Is it a collection agency that goes after them, or similar to personal credit?
Yes, it'll be the same thing. It would be, but they would go after the business assets, not the personal owner's assets, because it's all on the company. So if you pay all your stuff later, or if you pay it late, it's just not going to build your score. And eventually, your credit line recommendation is going to go down. Your credit score is going to fall below 80. Then you're not going to be able to open up any other lines of credit, just like your personal credit score. If you go from 800 down to 560, you don't get money, or if you get money, it's just too expensive and you don't do it, right? So it works the same way on your business. You're going to build a credit score, and if you don't pay your stuff on time, your credit score will go down, your credit line recommendation will decrease, and they just won't give you money if you're backlogged on payments.
Got it. But the benefit of getting the business credit is that it could positively affect their personal credit. So like what Barry said, if they had a poor credit FICO score on their personal side, obtaining the business side through the EIN would actually benefit their personal side and help raise that, or no? I think you mentioned that it would.
Because what happens is, as business owners, when I use my credit cards on one of my companies, I use lines of credit cards. I paid all my bills on time. I never missed a payment, but I was always using about 51% of my lines of credit card balances to fund my company. Well, you can't go over 30% on your personal thing on utilization. When you do that, your credit score goes down. So my credit score was always up and down, and I paid my bills on time. But now that I've built corporate credit, now my credit scores went up to over 803. I'm 56. First time ever I've got an 803 credit score. When I was leveraging cash on my Social Security number and personally guaranteeing it, it pulled my personal credit score. And by the way, I'm saving $385 on just my home and auto insurance monthly personally, because now my credit score is above an 800.
Wow, really?
It's funny. In today's day and age, almost everybody has auto pay, so it's hard to believe that people would actually pay their bills late or not pay them at all, because most times people just put it into their banks, and so auto pay this on X day, and away it goes.
But to your point, Jerry, wouldn't you love to save $300 on one of your personal car insurance or whatnot through your business, having established credit on your business?
No, absolutely.
That's motivation for me.
Insurance has got
it's big, right? Because if you didn't know it, your insurance premiums are based on your personal credit score, and you're not doing anything wrong. But when you leverage your personal credit into your business, it does hurt your credit score. When it comes down, everything you do, whether it's credit cards, lines of credit, vehicles, personally or for the business, or insurance rates, it's all based on your personal credit score. By getting your personal credit score out of your business, it's going to help. And I can't guarantee that you're going to have a good credit score. So if you get on your personal side and you don't pay your bills on time, and you overextend yourself, it'll still be the same recipe if you do that personally. But what we find is when business owners build EIN credit, they're no longer using their personal credit to fund their business, which does what? Lowers their debt to income, lowers their debt to income ratio and their utilization, which does what to your credit score? Puts it back up where it should be.
Yeah. So I know in the personal side, you can get soft and hard hits on your credit. Does that happen also on business credit?
Not if you pay your bills on time. It doesn't matter how much money you have or how much you've used. It's just about using and paying your bills on time. If you do that, you'll never get. Only time your personal credit will be affected is if you do what? Pay all your bills late. Right. That's the only factor. It doesn't have all the complicated underwriting like personal credit. It's just about paying your bills on time. That's it.
So I think your question, Barry, correct me if I'm mistaken. If they were to try to obtain sources of business credit, are they getting a hard hit every time a vendor Uline or somebody is pulling their credit? It's a hard hit, I'm assuming? Yeah. And would that affect them? Okay.
Inquiries don't affect your business credit score at all. So the typical things that we're all used to, because you're talking personal credit, right? The more inquiries, if you did more than 6 inquiries in the last 6 months, your credit score goes down. On business credit on your EIN, you can apply for 50 a month, and it won't affect your credit score. So thank you for clarifying the question.
Oh, another perk.
Yeah, perfect. Another perk. It's a shame that our educational system doesn't teach credit and how to use credit. Or, as you're going through life, this is just something a lot of people just stumble upon, that, I need some credit. And
we don't think of it.
Yeah.
That's why I was so blessed to have met Laura, because I was like, wow, this is a great niche of business to get into and educate people. It's all about education, right? And hopefully this podcast helps people be inspired. how to obtain more financial freedom with their company.
Yeah, definitely. Is there anything else that you guys wrap it up would like to add? How about you make sure that we've got everything down here we need, but also make sure that our listeners know how to contact you and get a hold of you guys.
So, Laura?
Yes, I mean, I'm here in Southern California. I'm more than happy to serve all the business owners that want to get more information about business credit score building. And my email address and information is probably somewhere in the bottom here, so people can just contact me. And as Jerry said before, we provide a free credit report. It's a good start just to understand where a business owner is right at the moment, and then we can help him to get there to this 80 plus, where the whole financial landscape of his business is going to totally change. And we are here to help business owners to grow their business, to expand, and to change actually their financial reality, their cash flow, give them stable cash flow.
Wonderful. Yeah, feel free to reach out to Barry or I at the www.investquire.com or through the Biz Show. We'll be happy to connect you to Jerry and Laura, and you can start working on your business credit.
Yeah, definitely. And just so everyone is aware, right? So Jerry and Laura, again, are from Galt. You can reach them at www.jgalt.io/Jerry, right?
Correct.
Very good.
That is correct.
We'll have you guys on our podcast. You were our first interview, so very blessed to have you today.
Thanks for having us. It was a pleasure being with you.
No problem. Thank you for having us. We really appreciate being on. I hope that your audience found this information useful. And you can also go to that website and download the 4-step guide to how to build EIN credit and understand everything that we just talked about. And it's our free gift to them as well. So $50 credit report and getting our free ebook guide on how to build EIN credit. They can go to that website at jgalt.io/Jerry, Jerry. Okay.
Let's hop on that website right now, Barry.
Yeah, let's do that. I'll make sure I also put that in the comments for the podcast as well.
Thank you, guys.
Thank you guys so much. You guys have a great day. And back to our listeners, this is some valuable information, right? And thank you guys for sharing all this, because who knew? And a lot of us didn't. But all right, that wraps up the episode, and we'll see you guys next week.